Hello everyone, my name is Gregory Schnazy and let's talk about Bitcoin Borrow Die. As always, these videos are for educational and entertainment purposes. They are not finance or tax advice. So today I want to talk about generational scarcity. Last week, the 20th million Bitcoin was mined and there's only 1 million left to be mined over the next 100 years. What does that mean for us? Who's holding Bitcoin? What does the market look like? And what can we learn from this? As always, Bitcoin Borrow Die is powered by Bitstack. Build your wealth in Bitcoin terms and visit us at trybitstack.com. So as I mentioned, the 20th million Bitcoin was mined last week, and this is a real dawn of the era of true scarcity where the last million Bitcoins will be mined over approximately the next 100 years. So taking a step back, what does this mean for us? So today, about 95% of all of the Bitcoins that will ever exist already exist. They've already been mined. So fewer than 1 million BTC remain to be mined by the network. And this is a monumental event, marks a transition from rapid insurance to true generational scarcity. We can see over here when Bitcoin started in 2009 to the forecast to 2037 here, how Bitcoin was issued through the halvings, and what does the total supply look like. So in prior videos, we walked through the halving cycle, the code that enforces this, and the 21 million cap. But to make things kind of simple, when we look at the total Bitcoin supply, money supply, Bitcoins in the market, it basically really shoots up over the first few halvings here, and then it starts to flatten out. It asymptotically reaches up to just under 21 million Bitcoin. So we are right about here at the 95% mark, and this has taken like 16, 17 years, give or take, right? So about 17 years to mine 95% of the total available Bitcoins, and it'll take pretty much 100 years to mine the rest. So a very small amount of Bitcoin, which diminishes by 50% every 4 years, will be released over the next 100 years. So the vast, overwhelming majority of Bitcoin that have ever been created or will ever be created are already in the market, which is really interesting. So as new supply diminishes and there's fewer new coins coming to market, if you buy Bitcoin, if you want to acquire Bitcoin, that means somebody on the other end has to cough up their Bitcoin for you to have it. It is a very zero-sum player versus player market, in the sense that if I own a coin, you cannot own the coin, and vice versa, right? So there's very little supply coming into the market from mining, from net new coins being issued by the protocol. So to acquire Bitcoin, you need someone else, somebody who previously has been a holder of it, or has at least purchased it, to sell it to you, or you work for it, or what have you, right? But who's going to release their coins to you, and at what price? So really just kind of touch on this again. It's like 17 years for the first 95%, and then like 100 years, 114 years for that last 1 million to come out, about 5%. And then looking at this from sort of a world population type view, there's just very little Bitcoin to go around. Like on average, it's like 0.0025 Bitcoin per person. It's just extremely hard to acquire it. Most people don't have any. They don't really have any, or very small amounts. Because again, no one is going to sell it to them at a reasonable price. So get stacking now while you can. When we look at the Bitcoin market and who's holding it, where has this gone over time, about 60 to 70%, still a really large bucket over here, is individuals. So it's, Satoshi, whales, retail, exchanges. And this kind of goes back to this issuance schedule where so much of the BTC, let's say 75% from 2010 to 2017, about 7 years, 70% of all of Bitcoin was issued. That's extremely fast, right? So especially way back in the day. I mean, Bitcoin didn't even have a price at the beginning. It was just all sorts of things, but not everybody knew about it. Not everybody purchased it. It was just issued extremely quickly and to individuals, miners, people who could mine on their computer, early adopters, all that. So this is a really super ingenious way that Satoshi just got it out to people and to individuals. And there's a lot of whales, but it's just a big chunk of Bitcoin is still held by individuals. And then when we look at companies and corporate treasuries, they're making up 5 to 7% of the market. Strategy is by far the biggest one, about 740,000 BTC, and that has grown quite rapidly. Then we have the ETFs, and they're about, or at least IBIT is about the same, Strategy, give or take, and Fidelity, Grayscale are a little bit smaller. This has been a fast-growing category. This kind of overlaps. I mean, these are individuals as well, but it's a little bit different than this bucket because this group is holding Bitcoin directly. The ETFs are the individuals there are holding claims on the Bitcoin through the ETF that the institutions are holding for them. And then we have governments on top of that. So the US, China, UK, El Salvador. So these are kind of the people that you're competing against in the market, that when you sell, you need somebody to be on the other side. Over the last, especially 2 or 3 years in this bear market, we saw a lot of retail and individuals selling. So that's really kind of the primary people, maybe some whales taking Bitcoin off the table, where you can acquire sats relatively cheaply. But when you start to look at these other buckets and they continue to grow, I mean, good luck getting Strategy to sell you Bitcoin. That's not happening. Institutions, when people have these in their Roth IRAs, their retirement accounts, things like that, first of all, they don't want to sell because that's not what it's for, and there's tax penalties. So they're not really going to be coughing it up. And governments, as they acquire, they're not going to sell to you either. So it's there's only so many individuals that can sell at these types of prices until we just run out of sellers. And then it's back to price discovery mode, and it's going to get really, really hard to acquire Bitcoin in meaningful terms. Sort of looking at the breakdown now in size, we have a pretty much in large supply of about 7% of people who have less than one BTC, kind of the shrimp and the crab market over here. Mostly individuals, just smaller accounts. About 10% is octopus in the 1 to 10 BTC range here. And then as we kind of scale up from there, we start to get to this 10 to 500 Bitcoin bucket. And these could be some companies, other entities like that. And then whales, where it's long-term holders, exchanges, people who have been in the market for quite some time. And then this is looking at a HODL wave from January of 2022 to today, basically. As we look at these colors up on the top, it's longer holders up here down to shorter holders around here. And we can kind of, look and see the age of coins, how people are holding over time and what has changed. So, a few little things to note out here for the 10-year holders. They're growing and having a larger overall percentage of the market. This is a few different things driving this. It can definitely be lost coins, but it's also just more time. As more time passes, there's more opportunity for more people to have held for 10 years or longer. And that's kind of true for all these top bands here, right? So from the 7 to 10 year, this blue one is kind of starting to grow. The 3 to 5 or the 5 to 7 in this teal is interesting, how it was fairly small, got a little bit wider, and then there's been some sell-off or reduction there. That's sort of interesting. So that's people who have been in for a cycle, maybe a cycle and a half, have been somewhat trimming down. We see this with the 3 to 5 years as well. And then kind of coming down to the 6 month to 1 year, this band. And the 1 week to 1 month band down over here. We've had some sell-off in more of the short-term holders, kind of these buckets, especially over January 2022 to 24-ish. And then they kind of start to tick back up a little bit. We've got this 1 to 6 month band starting to come back up over here. But we can kind of see how the coins move, and there's been just some distribution from these bigger older bands lower. So this is kind of shows the story of how the market has been moving over the last couple of years, and where you can buy coins from, aside from net new ones in mining. But as these buckets, the older ones, just get bigger and broader, it's people who have a position in some type of retirement account, or they have proper income, or they're applying the Bitcoin borrow die strategy, which is what we want to do here, is where we stacking our coins daily, weekly, whatnot, and then we want to just keep pushing ourselves up these bands to never have to sell. And this brings us to our 4-step playbook, where we want to, again, DCA, purchase frequently, generate more income than we spend, and then be able to use the leftovers to buy Bitcoin, borrow conservatively, keep our LTVs extremely low to allow it to compound. So this allows us to be in the market, to have coins that go from holding from 1 year to 5 years to 10 years to 20 years. Keep on going like that. And then when we pass on our inheritors will inherit the funds at a stepped up cost basis, so they won't have to pay tax on that piece. And this is just kind of to summarize that the 20th million Bitcoin has been mined. 95% of all Bitcoin that will ever exist are in market now. And it's going to take about 110 years to mine the remaining 1 million. So if you can't get Bitcoin, net new ones from the protocol, that means you need to find somebody who has Bitcoin to sell it to you. And we're going to run out of sellers at these prices, especially with adoption, strategy, stretch, stack while you can, because the price will be going up.